think retailers are doing okay. They're navigating this environment very well. Navigating it because sales strength exiting the second quarter is continuing. You're seeing the fact that consumers may be buying a little bit earlier to avoid any of the price increases, given the goods in the second quarter weren't as high tariffed as what you may have. And you know what else they're doing? Marketing spend is increasing, product innovation is driving conversion, and denim jeans are working. You're seeing across the board, whether it's Kohl's, whether it's any of the other retailers, wide leg, baggy is hot these days.
Like I'm in 7th grade all over again. That's what it is.
Yeah, keep repeating 7th grade.
Yeah, it's what we wore. That's crazy.
Yeah, that's what's happening again. And the tariffs, yes, there definitely are an uptick, and you're hearing that consumers overall, we don't know what they're going to react to these higher prices. They're first expected to come late Q3 and into Q4. But the retailers are managing, frankly, a little better than what I would have expected.
So you mentioned sales strengthening. Do you view this as a sign of durable consumer strength, or more like pre-tariff buying, or because of the great promos we're seeing? How do you assess the health of the consumer?
I think the health of the consumer is pretty much okay. I think consumers are spending deliberately. I think the high end is traded down. We've consistently heard of Walmart getting the biggest growth from some of their higher income customers. You're seeing the Ralph Lauren's or the Tapestry drive average unit retail selling price increases with product innovation. And frankly, look today, Hollister delivered a double-digit same-store sales increase, which was impressive. And you look at Kohl's basically improved their proprietary brands because that value customer wants to see newness in proprietary brands. And let's not forget, we're going to get the last off-pricer tomorrow, but TJX and Ross were also solid. Consumers are buying ahead of price increases. Retailers are delivering product newness. It's back to school season, and everyone's still being discerning.
Another thing I'm looking at is retailers are still investing in store openings and remodels. So how much is that translating into traffic and conversion versus just being more defensive? I personally shop online and I don't go to stores anymore, but it seems like people still do.
They do. When you think about store openings in retail real estate, there is more demand than there is supply. There's not a lot of new development. Any of the closures that you've had, companies and retailers are taking them. The growth of whether it's a Five Below, a TJX, a Ross Stores, or Burlington, there's hundreds of stores that can open. You've seen the landlords overall pivot. Basically, grocery-anchored shopping centers can be lifestyle also, and vice versa. Wherever the consumer is located and near, it's more a focus on where can I get the goods. And yes, online is still there, but it's not either or, it's both.
We got to talk about these India tariffs, 50% on the country. It's upending ties with Modi and with a longtime and an ally that wants to even become closer to the United States. Exporters of clothing, footwear, and small manufactured goods like toys are bracing for falling orders and possible job cuts. What's going to happen as a result of these tariffs?
I mean, we saw it when it was just so high on China too. Retailers work to do three things. They diversify their sourcing as fast as they can. They share the expenses with the suppliers and manufacturers. They raise prices to the end consumer. Hard to do this so quickly, and it's an obstacle.
There's a great chart in the piece that comes from data from the White House, and it shows that India tariffs are the highest of any Asian nation, 50%. But other countries, Laos, Myanmar, 40%, China, 30%. You've got Sri Lanka at 20%, Taiwan, Vietnam, Cambodia, Indonesia. I mean, these places I'm mentioning all export to the United States. Many of them are areas that have been diversified to away from China. So you can only diversify so much if everybody has tariffs.
Exactly, and you can't come back to the United States for all intents and purposes, given you don't have the labor and it's prohibitively expensive. What we've seen happen is we've even heard of some retailers who diversified away from China. They went back to China because the tariff became a little bit lower than some of these other places. Wow. It is moving pieces all together, and it's not staying stable.
When do we see it hit the actual price of these goods? Because up to now, as you mentioned, retailers are eating some of this, but how long can that go on?
Since April 16th, we've had a price tracker of 80 items. We price it every single week. We've seen some increases, but not across the board. Footwear is where we've seen the increases. Expecting that by the end of the third quarter into this fourth quarter, we're going to see more expansive price increases, and we're still not seeing it holistically across the board.
We also have to talk about interest rates and with the potential to lower interest rates, how much support could that provide the shoppers for discretionary spending when it comes to the holiday and in the lead up to 2026?
Just the fact that we'll have lower interest rates is a positive for discretionary spending. It's something that takes months in order to really put in action, but the feel-good factor of it will lead to a more productive spend. At the same time, when you're looking at the labor market, we watch it carefully because we can't see that labor market weaken, because that will ultimately impact holiday season sales. The strength of back to school is a good pathway to holiday.
It seems like broadly you sound really bullish. What could be a headwind then? What could really buckle all of this development to the downside?
Labor weakening, price increases coming, and the consumer pulling back. That's why we say our theme is everything's good, but will consumers slow down? But will retailers have the inventory? Second quarter so far, though, coming in better than expected.
How's ultra luxury doing?
Slowed. Ultra luxury
Why
is
is
slowed.
that?
I think that you're not getting as many international tourists here to the U.S. You're seeing the Chinese not spend as much as they had been, and you're seeing prices for some of the luxury brands. Did they just get too high?
Interesting. So what are they doing to?
Well, look what the newest thing that just happened earlier this week. Louis Vuitton introduced a beauty line for Louis Vuitton. Usually,
This is the $160 lipstick?
It is the $160
Okay.
lipstick.
Yeah.
But that is the newest thing they've introduced, and so they're diversifying the categories that they compete in.
Is that going to work?
Everyone wants a little bit of luxury. $160 compared to Hermes, which is $80, compared to Chanel, which is $50 or under. Let's see what happens. But you know what? One of the things is for all different types of luxury, consumers will pay up if there's exclusivity and a desire, along with authenticity.
So it seems like consumers are trading down and we don't see a lot of trading up. Is that what you're saying?
Yes, we're not seeing the trade up like it had been before. If you look at the Walmart numbers, you look at the TJX, they're searching for value to maintain their pocketbooks.